Will earnings and guidance be strong enough to keep pushing stocks higher? Let's bring in Doug Butler. He's portfolio manager with the Rockland Trust. Good to see you. What's the answer to that key question?
Great to see you, Scott. Look, I think, as you just heard, I think there will be continued beats, although it's going to be at a decelerating story. So they're going to continue to beat. They're going to guide probably a little lower for the fourth quarter, and certainly people are being very conservative with their guidance for 22. So but still we expect most companies will come in and beat earnings, and probably in that low teens, like, maybe even as low as the high single digits, which will be, cause a little problems for the market.
We've had some of the biggest investors in the world on the network this week. It seems everybody is talking about inflation, some worrying about it more than others. Of all the risks out there, I say inflation, but then I say, well, real rates are so low, maybe stocks aren't as expensive in this environment as some people try and claim. What do you think?
Look, in terms of our real rates are very low, although you've seen that the TIPS break even has stretched to almost all-time highs. I think there's the inflationary fears, particularly the stagflationary fears, are probably a little overblown for my liking. And that's probably why I still feel like the economy still has room to grow. We will actually I would forecast having a pretty decent year for stocks coming forward, even off to really strong years. I still think there's room to run. I think that, again, the inflationary pressures, you see Brent and WTI at $85. Long term, do people think that oil is going to be at $85? And those same people thought oil was going to be like in the 30s.
Right.
So my feeling is oil's probably not going to 100, and it's probably more likely to get back down to the 50, 60 range.
And the taper doesn't matter? All of that is offset by the fact that the Fed is still buying a lot of bonds, and there's still a lot of liquidity in the system, regardless of what the Fed does.
Yeah, the Fed is going to taper. They're going to taper before they increase rates. That's definitely been pretty clearly signaled. The question is does the taper really affect both corporate earnings and affect people's wages? Again, I think we're seeing wage inflation. You're seeing a lot of input cost pressures, labor shortages still remaining the dominant themes, along with these supply chain constraints. But to be fair, labor shortages and cost pressures lead to a healthier consumer balance sheet, certainly. And, given that they still accommodative straight, corporate balance sheets are still in really good shape.